Today, we're going to try and decode a modern Wall Street mystery. It's a wild story, really. You've got a company that went bankrupt, a revival that, well, it shouldn't be happening, and it all might tie back to the ghost of a legendary and seriously tough playbook.
So what if bankruptcy isn't really the end? What if it's just, I don't know, a strategic pause? Like a tool that these master dealmakers use to just completely reset the board? That's really the big question we're diving into here.
Okay, so the company we're talking about, it's Bed Bath& Beyond. Now, officially, they went bankrupt. The shares were canceled. That should have been it, right? End of story. But something really strange has been happening lately. The brand, and get this, even its old stock ticker, are being deliberately brought back from the dead. And it's a puzzle that, on the surface, just makes zero sense.
So to figure out what's going on with this ghost in the machine, we've got to look back. Turns out this whole corporate resurrection thing, it might not be new at all.
And you know, there's this really detailed theory that's been picking up a ton of steam in online investing circles. And it argues that the key to this whole mystery is hidden in the playbook of one of Wall Street's most, let's say, controversial figures. So it's time to meet the architect, the man whose name is basically a synonym for shaking up corporate America, Carl Icahn.
Yeah, that quote, that's pure icon right there. He looks at business like it's a game of high-stakes poker, and in his world, there's just no room for nice guys. And it's exactly that ruthless, pragmatic view that made him a legend. And, you know, a billionaire.
All right, so who is this guy really? He started out and quickly got this reputation as a corporate raider. These days, the term is a little softer, activist investor. But just look at these numbers, they're insane. He grew his initial stake at a staggering 31% a year for over 40 years. I mean, to put that in perspective, Warren Buffett's Berkshire Hathaway, a name everyone knows, grew at around 20% during that same time. His strategy is actually pretty simple on paper, but it's brutal in practice. Find a company you think is being undervalued, buy a massive chunk of it, and then force them to change.
And what's so wild is that you can basically boil down his entire career into a formula. It's a repeatable blueprint, a playbook for pulling value out of a situation where everyone else just sees a total collapse. So the fancy term for what Icahn does is activist investing. And look, this isn't about patiently waiting for a stock to tick up. No. This is about buying your way into the driver's seat and forcing the changes you want to see, whether that's selling off parts of the company, buying back stock, or just firing the entire management team.
Okay, so this is it. This is the blueprint. It's a 5-step formula. First up, enter during chaos. You target a company that everyone else is running away from. Step 2, gain influence. You buy up a huge stake and you start making demands. Step 3, and this one is absolutely crucial, strip and restructure. You sell off the good stuff, the valuable assets, and you get rid of the debt. Step 4 is interesting, preserve the shell. You hold on to that clean corporate structure, the brand name. And then finally, step 5, relaunch or sell. You just wait for that perfect moment to either bring the company back from the dead or sell off that clean shell for a massive profit.
Now, this might all sound a bit theoretical, right? But it's not. Not at all. Icahn has run this exact play before. So let's look at maybe his most famous or infamous takeover, the airline TWA. Man, the timeline here is just, it's incredible. So in '85, he gets control of the whole airline. Just 3 years later, he takes it private, and in that deal, he personally pockets $469 million. That's more than he paid for the entire company. Then the asset stripping begins. In '91, he sells off TWA's crown jewels, its super valuable routes to London, for almost $500 million. And what happens a year later? The airline, now totally crippled, files for bankruptcy. But get this. Even then, he wasn't finished. He came back as a creditor and set up this ticket deal that kept sucking an estimated $100 million a year out of the company. And this quote from a former TWA pilot, wow, it just brings home the human side of all this. You know, for Icahn, it was just another transaction on a spreadsheet. But for the people who worked there, this was the beginning of the end. He says it was a killer. And he meant it. Okay, so with all that history in mind, let's circle back to where we started, to our original mystery. The big question these online theorists are asking is this: are we watching a modern version of the TWA playbook unfold right now with Bed Bath & Beyond? And this, right here, is where the theory gets really compelling. It maps the Icahn blueprint step by step directly onto what's happening with Bed Bath & Beyond. So the playbook calls for a controlled entry? Well, BBBY filed for a voluntary Chapter 11. That's a legal process that lets you stay in the driver's seat. The playbook calls for stripping away liabilities? Court filings show that's exactly what's happening. Creditor claims are being wiped out. It calls for holding on to a clean shell company, the legal framework without all the debt, and what do we have here? A new entity, codenamed Butterfly, was carefully kept alive. And the final step, the relaunch? The brand and the stock ticker are being brought back. It lines up almost perfectly.
So you see, the people who believe this theory don't see a random company failure. They see deliberate signals. They point to the voluntary bankruptcy as a strategic reset, not just a collapse. They highlight that weirdly named butterfly shell company being preserved. And for them, the biggest signal of all, the smoking gun, is the revival of the brand and the ticker. That's proof of a plan. Oh, and the theory often ropes in another modern activist investor, Ryan Cohen, suggesting he might be the one pulling the strings this time.
So, where does all this leave us? We've got all this history, all these data points. What does it all mean?
Well, it really boils down to two totally different ways of looking at it. On one side, you've got what looks like a masterful, calculated financial strategy playing out, a proven playbook being used to create enormous value from the ashes of a failed company. But on the other side, maybe this is just a super elaborate theory, a compelling story that's been put together by passionate online investors, connecting dots that might not actually be there. Both arguments are pretty convincing, aren't they?
And that's really the question we're left with, isn't it? Are we witnessing the ghost of Carl Icahn's playbook in action, a genius financial play unfolding right in front of us? Or is this just one of the most elaborate, most compelling fan theories the financial world has ever cooked up? I mean, all the pieces are on the board, but only time is going to tell us what the final move is.